So we actually have a pretty good report this week for Los Angeles homebuyers. We have a lot of metrics that have moved in buyers' favor, including a huge uptake in price drops. Welcome to the Los Angeles Real Estate Roundup for August 12th, 2024. My name is Jon Schwartz. I'm a Los Angeles realtor and investor. Let's get right into the numbers. Mortgage rates are still low. This is the average 30-year fixed rate mortgage rate as reported by Mortgage News Daily. This is going back 12 months. As you can see, we are at the lowest point on this graph. Let's zoom in closer to what's happening now. Mortgage rates hit their lowest point since March of 2023 on August 5th when they hit 6.34%. That corresponded with the global stock sell-off. That was a reaction to the weak jobs report we had last Friday. Then rates came back up to a high of 6.63 and now have fallen back to 6.54%. What's nice is that we didn't climb all the way back up into the sevens. Actually, that's not even the sevens. The sevens are all the way back here. And remember, a national average rate of 6.54 means that borrowers with good credit scores are going to see rates much closer to 6. In fact, when the average rate was down here at 6.34, some borrowers with strong credit were seeing rates in the 5s. Sounds crazy, but I saw with my own eyes. All right, let's get into this week's local data. Right now, we're looking at the weekly market data for the Los Angeles metro market as reported by Redfin, and I want to start with the weeks of supply metric because this is actually the only metric this week that doesn't look rosy. Weeks of supply this week fell to 14.6 from 15.2 last week, and as we all know, when weeks of inventory drops, that means that inventory is being constrained and it's becoming a tighter market for buyers. However, this metric can jump around a lot, and we see that it does, and I want to explain to you why. So weeks of supply is actually a simple equation. It's the number of homes that are left on market at the end of the week, and we know that that is called active inventory, divided by the number of homes that were sold that week. So if in a given week on the LA market, at the end of the week, there are still 14,000 homes on the market, and during that week, 1,000 homes sold. 14,000 divided by 1,000 equals 14 weeks of supply on market. Now, the reason why this number can jump around a lot is because it's an equation. There's a denominator and a numerator, and if these numbers move in opposite directions, it can cause the product of the equation to jump around a lot. So yes, weeks of supply fell this week, but we can see the overall trend over the last 2 months is a gentle upswing in weeks of supply. That means more inventory. That means a market that is becoming more friendly to Los Angeles homebuyers. And when we look at the individual metrics, we indeed see a market that is more friendly to homebuyers, at least for now. Let me show you what I mean. New listings took a big jump this week, up to 1,522 new listings from 1,422 new listings last week. And as you can see, the year-over-year growth also expanded from 11.1% all the way up to 15.6%. This is great news because it ends a 2-week down cycle and puts us back on the up and up. Now, if we look at homes sold, we see that we're still outpacing last year, but by a smaller margin. So whereas last week we sold 1,000 homes for a 3.1% growth over the previous year, this year we sold 1,057 homes for a 1.4% growth over last year. So in terms of looking at how many homes are on market relative to last year, when new listings goes up and homes sold goes down, that means more listings. More listings means more inventory, means more opportunity for buyers. However, pending sales moved in the opposite direction. The margin grew relative to last year. So last week we had 1,186 homes go pending, which is a 3.6% growth over last year. This week we had 1,237 homes go pending, which is a 4.4% growth over last year. With pending sales growing relative to last year, it means that about a month from now, we can expect more home sales relative to last year. And with more homes exiting the market by being sold, that is downward pressure on inventory, upward pressure on pricing. And that's worrisome for September because we can see that total active inventory is shrinking relative to last year. And this week is an interesting example of the phenomenon in which absolute number of active listings can go up, but the growth from last year goes down. Let me show you what I mean. Last week, we saw total active listings at 15,136, which was 22.29% more than this time last year. And now we're at 15,206, so that's a growth in absolute numbers, but the year-over-year growth is 21.25%. So we added more active listings, but we actually shrunk a percentage point relative to last year in the number of total homes listed. And if we come down to the year-over-year chart, again, we see we peaked a couple months ago, and we are continuing our downtrend of total active inventory relative to last year. Still, as I said at the top of the video, this is a moment for buyers to breathe easy because the current metrics showing us what's happening right now are great. Off market in 2 weeks is a metric that shows us how fast the market is moving in Los Angeles. It tells us the percent of pending listings that went pending within 2 weeks of being listed. And as you can see, that number dropped from 28.9% last week to 28.1% this week. This follows weeks of upward movement. So it's nice to see this metric break in buyers' favor. But this right here is a big one. We saw a huge leap in the percent of active listings with price drops this week, and this is continuing a weeks-long trend. This week, we jumped up to 4.9% of active listings are carrying price drops. Just a month ago, we were at 3.7%. So sellers who are currently on market are seeing more and more difficulty selling their homes at the prices they're asking for. And that uptick in price drops means that we have motivated sellers who are trying to sell. That's great news for home buyers. And that's reflected in the median sale price of a home in Los Angeles, which fell for the third straight week to $921,000. Just 3 weeks ago, up here, we were at $932,000 for the median sale price of a home in Los Angeles, and it's been a nice downward trajectory since. Where's pricing headed? Well, we get a hint if we look at new listing median price. This is the median price at which a new home in Los Angeles is listed, and that actually went up this past week, all the way up to $950,625 from last week's $941,250. And this metric, new listing median price, is a really good barometer for real estate agent sentiment. When agents are feeling bullish, this number goes up. When agents feel like they're entering more troubling times, this metric goes down. And say what you want about real estate agents, a lot of them aren't the sharpest tool in the shed, but they're the ones out there in the field dealing with buyers and sellers, and they really have a good sense for where the market is right now. And it looks like agents are thinking we may have overcorrected the past few weeks, bringing the median asking price down. So let's inch it back up. And I totally see where they're coming from. I mean, this is my feeling of the market right now too. Right now, we're in a really swell moment where lots of home sellers are cutting prices. Homes aren't selling quite as fast. There's plenty of inventory, though there are signs that inventory will shrink a little bit in the month ahead. I like to say inventory is way up, but it's not continuing to go more way up. It's actually moving in the opposite direction. So look, if you're a home buyer, this is a great moment. Stay tuned to see if these predictions play out and inventory tightens up as we head into September.